Well, good afternoon, distinguished guests, ASEAN Plus 3 and Emerald colleagues, and participants from around the world. Today's seminar is based on the book that we just launched, Trauma to Triumph, Rising from the Ashes of the Asian Financial Crisis. The question is, why did we choose to publish the book now? Why do we want to recall something that happened 25 years ago? The simple reason is that this is the 10th anniversary of Emerald, and if not for the Asian financial crisis, Emerald would not be here. The Asian financial crisis was a watershed event in economic history. It was the first global emerging markets crisis, started in Thailand, spread rapidly across the region to Malaysia, Indonesia, Korea, and then went on to spread to Russia, Brazil, and other emerging markets economy. It led to the formulation of several international forums, including the Financial Stability Board, the G20, the Chiang Mai Initiative, the CMIM, and now Emerald. We are publishing the book now to remind people of why Emerald was established and how we got to where we are today. We want to make this book useful for policymakers who would like to know what went wrong, and to scholars doing research on the crisis. But we also want to make the book accessible to the general public who are non-economists. We hope the book will be inspiring to the younger generations of readers who grew up after the Asian financial crisis and have no memory of the event. To make the crisis come alive, we decided to do an oral history of the crisis. We got two historians to interview former policymakers who were involved during the crisis to tell us what happened at the time. And we are very lucky that some of them are actually here with us today as panelists. And also in the audience itself. We started this history book about 2.5 years ago, before the COVID-19 pandemic. Because of the disruptions, the project was delayed, and we were worried that the book may not make it in time for the 10th anniversary celebration today. The book is about 880 pages long. I think you have a copy, galley copy on the table. It is in 5 parts. It starts with an overview of the book, followed by a fascinating account of what happened in each country during the crisis, based on the oral interviews with policymakers who were involved during the crisis. It then moves on to an in-depth analytical study of the impact of the crisis on each country by an eminent scholar or expert, and how the crisis shapes the evolution of regional financial cooperation. It concludes with some reflections on the achievements of the region and a discussion of the evolution of regional financial cooperation and the challenges ahead. So we are lucky here to have with us here Freddie Orchard, our historian who did oral interviews. So Freddie, you were involved in several interview projects in the past, and you just wrote a book called on the history of Singapore's reserve management called Bold Vision, which is a bestseller in Singapore today. Obviously, every history project is different from the others. In your view, what was the most challenging part of the history book project? Do you feel that you were able to interview enough participants to recapture the drama at the time of the crisis in each country? And any key message or takeaway that stand out from this project? Please.
Okay, thank you, Hoi. Well, the biggest challenge was, in fact, securing the participation of key policymakers and observers. And for some of them, it meant reprising traumatic, sometimes painful memories. But thankfully, we succeeded in assembling a pool of well-connected individuals in 9 countries across the region, as well as the IMF and World Bank. And using these interviews, we wrote country narratives of how the crisis evolved and unfolded, of the drama and tension behind the pivotal developments. So let me give you two examples of how the eyewitness accounts added color and detail to the narratives. So the first is Lim Chang-yo, who was Deputy Prime Minister and Finance Minister, Finance and Economy Minister, in Korea. And Minister Lim had recalled, the U.S. ambassador to Korea asking to attend the negotiations between Korea and the IMF on a financial assistance package. And rightfully, Minister Lim rejected that request. But as the negotiations pursued, Mr. Lim noted that from time to time, one of the IMF team members would leave the room and run upstairs to meet a team of US officials that were stationed there. And the sort of reasoning was that obviously to seek their, their advice on how the negotiations would proceed. So there were many ways to skin a cat. The second example is from Norman Chan, who was a deputy CEO of the Hong Kong Monetary Authority, HKMA. And at that time, speculators were trashing the stock market, the Hong Kong stock market, and the Hong Kong dollar. And they were using this double play strategy to break the Hong Kong peg, Hong Kong dollar peg. And Norman recalls, and talked about in the interview about a secret morning meeting with the CEOs of the three largest brokerage firms in Hong Kong. And that meeting was the prelude to the HKMA embarking on a stock buying operation. It was an initiative that turned the tables on the speculators, and that was and it was a short squeeze on the speculators. So these and other first-hand accounts, make what I think this book that we have, this section that we have produced, something that is unique, illuminating, as well as approachable, an approachable read on the Asian financial crisis. So I'll stop here, Hoi, and maybe we can pick up some questions later.
Yeah, thank you, Freddie. So Freddie has done an excellent job in compiling all these anecdotes, and I will really encourage you to read the book because it really brings the Asian financial crisis alive again. We'll now move on to our panel discussion, but before we begin, I would like to play a video message from Governor Kuroda, who is really one of the founding fathers of CMIM and AMRO.
Good evening, everyone. Given my deep involvement in the design of regional financial arrangements throughout my career, I am indeed delighted and honored to take part in this celebration of AMRO's 10th anniversary. Over the last decade, AMRO has developed into a well-established international organization. Its presence has steadily increased in international forums, and its credibility has grown like a trusted family doctor in the Asian region, thanks to the outstanding leadership of past and present directors and to the dedication of the member countries. AMRO should be proud of its remarkable development so far. For the purpose of securing macroeconomic and financial stability in the region, AMRO provides an important basis for the multilateral currency swap arrangement, the Chiang Mai Initiative Multilateralization, or CMIM for short. For example, AMRO's macroeconomic surveillance serves as an essential input in designing deciding the activation of the CMIM. In addition, its support in amending swap arrangement rules is an important contribution to ensuring solid implementation of the CMIM. I would like to take this opportunity to say a few words about regional financial arrangements, reflecting on my own experience during the Asian financial crisis. A quarter of a century ago, I remember that there was a desire to set up a new regional safety net in Asia. The logic was straightforward. The international capacity to provide financial support to the Asian region was insufficient, and therefore the region needs a scheme to provide emergency assistance in a timely manner. Despite some differences in opinion, calls for a regional scheme eventually gained traction among our Asian colleagues, leading to a gradual but steady movement forward. A standing bilateral facility, the Chiang Mai Initiative, was introduced in 2000, followed by the present multilateral facility, the CMIM. The Asian financial crisis has provided us with useful lessons for preventing contagion. These include maintaining sound macroeconomic fundamentals, having a good regional surveillance framework, and importantly, having an effective and workable safety net. The establishment of the CMIM is a clear demonstration of the ASEAN Plus 3 learning from the crisis and collectively overcoming the differences in views to secure stability in the region. Just like the CMIM, AMRO is a symbol of the cooperation and mutual help of the ASEAN Plus 3 finance process. As COVID continues to weigh on the global economy and the economic recovery remains divergent across countries, expectations are high for AMRO to play a pivotal role in macroeconomic surveillance. I am sure that AMRO will continue to play an important role, and the dedicated member countries will continue to stand ready to support it. As the saying goes, experience is the teacher of all things. The upcoming panel discussion on the lessons learned from the Asian financial crisis provides a crucial perspective for understanding and solving the current and future challenges. I hope you all enjoy the discussion.
Well, we just heard from Governor Kuroda and his message that we should learn from the lessons of the crisis in order to strengthen ourselves and move ahead. So have we learned the lessons? To help answer that question, we have 4 excellent panelists who were all involved during the crisis. I'm going to ask each of them 2 or 3 questions related to the crisis, 1 on the trauma, 1 on the triumph, and 1 on the lessons. So I'd like to start with Kun Bandit, my old friend, who was former Deputy Governor of the Bank of Thailand, and he was in the trenches during the crisis. So Thailand had a relatively high level of reserve at the time of the Asian financial crisis. In fact, I think, if I remember correctly, about $38 billion US. And yet, it was not sufficient to defend the baht against the speculative attacks. What does that imply in terms of the concept of building an adequate level of foreign reserves and the ability of a central bank to use the reserve to intervene to support its currency? Kumandi?
Yes, thank you. I think let me just repeat that the Asian financial crisis of 1997 was the first of its kind in many ways, especially the way it demonstrated the risk crisis to countries arising from international capital flows that could set the stage for leverage and a boom bust type of situation. with pressure on currencies and periodic speculative attacks being part of this new global setting. I think all these things we now know well, but they were something quite new, 25 years ago, especially in the context of policy management. I think after the Asian financial crisis, the importance of having high levels of reserve to protect countries from crisis was clearly recognized, not just to better manage the pressure on currencies of countries, but also to maintain confidence of financial markets and to enable countries to absorb the impacts of external shocks as the first lines of defense. So reflecting this, if you see, look at the data going back to just post-crisis period, you can see that the reserve positions of countries in the region have strengthened enormously since the AFC, through capital account surpluses and also through reserve accumulations. And with it, there has been a lessened risk of crisis of the type that we saw in 1997. So I think AFC was an important learning curve in this regard.
A lot of people have said that the crisis in Thailand was inevitable, that it was caused by financial imbalances, by excessive short-term borrowing in foreign currencies by domestic banks, who on-lent the funds to property developers and other non-productive projects. As a result, you have a currency and maturity mismatch. In your view, was the crisis inevitable? Could the crisis in Thailand have been avoided if not for the speculative attacks?
I think the Thai crisis, if we look back, it started as a classic case of strong growth, driven by external borrowings that led to leverage and excessive spending. And as the imbalance developed in terms of high inflation and large current account deficits, the policy response was also a classic one of expenditure reduction, initially through higher interest rate, followed by expenditure switching after a change in the exchange rate regime took place, which, as we know, resulted in a large devaluation. I think these policy responses were successful in correcting the imbalance. However, what most people did not foresee was the large and prolonged impact that the devaluation could have or had on the financial position of the indebted companies that had borrowed in foreign currencies, and through them, the health of the banking system. And this was actually what happened in Thailand. And this was how the imbalance was turned into a systemic crisis. And also looking back, I think what most people did not see at that time was how financial markets, through the movements of international capital and speculation, could set off a strong contagion and spillover across the region, thereby spreading the crisis. So as I noted, the AFC was the first in many things. And in the case of Thailand, there were economic imbalances that needed to be fixed. But free capital movement and currency speculation did complicate the situation and made the policy conduct somewhat more challenging because of the way it affected financial market confidence. And as you can see that from our experience in the region, there were a few countries that got into the crisis situation, both with and without the high profile or outright speculations. So it was a combination of the forces of the imbalance which could be fixed, and then the pressure put in place by the capital flows and speculations.
Well, Thailand has rebounded very strongly since the Asian financial crisis and even repaid its debt on time, ahead of time rather. Today, Thailand is a high middle-income country with thriving manufacturing, agriculture, and tourism sectors. It runs a current account surplus and as one of the strongest external positions in the region. It has become a net creditor country. Why do you think Thailand has done so well? What are the factors contributing to this strong performance?
I think this point's been mentioned by the videos that we just saw. I think the AFC led Thailand and many countries in the region to re-examine the risks and the vulnerabilities of the process. And many countries undertook comprehensive reforms. This includes the reform of the policy framework, the reform of the banking sector, and also the reform of the governance in the private sector and the functioning of markets. In the case of Thailand, I think we undertook comprehensive reform in all of these areas, which markedly has helped to strengthen the country's foundation for growth. So I would say that this reform were important factors contributing to Thailand's good performance after the crisis. But one thing I would like to add, just listening to the video before, is that at the global level, I think many innovative measures introduced to manage the crisis at that time of the AFC have also helped shape the thinking and the design of policy response, to the crisis afterward, not just in the regional context, but also in the global context. If you remember, for example, things like capital controls that were very controversial at the time of crisis are now, I think, being seen as possible options of central banks in their policy tools. Also, measures to limit credit expansion by the banking sector with a view to preserve financial stability. For example, the loan and value ratio to the housing sector. All these were seen as intervening in the markets, but somehow things have evolved through time, and they are now have become standard macroprudential measures. And of course, the need for a comprehensive surveillance of economies and financial markets to prevent risk of crisis had also led to the setting up of AMRO for the region, which is now 10 years old. So I would say there are many positive things that came as a result of the Asian financial crisis 25 years ago. Yep.
Thank you, Khun Pandik. Well, we now move on to Pat Sudrajat. You were governor of the Bank of Indonesia when the crisis broke out in Thailand. At that time, Thailand was a well-performing economy, praised by the IMF for its strong macroeconomic performance. What was your initial reaction when you heard that the Thai baht was under attack? Were you worried that the crisis would spread to Indonesia and that the rupiah would come under severe attack?
Thank you, Dr. Hoi. Yes, very much so. And even though at that time, I must admit that I was not really very sure about what it meant by contagious effect in financial crisis. However, we learned very fast from the crisis that it was not only geographically spreading from one economy to another, but also from industrial sector domestically from one to another, that in the end, it encompasses the whole economic of the nation. And of course, for sure, nepotism and corruption was notorious then, maybe even now. So that factor indeed sort of pressing even more the national economy. But at that time, actually, we already established mechanisms. Every time we were under attack, this mechanism worked before, like in 1995, when there was a Mexican peso attack. We did this kind of policy and it worked. That is, we widened the band of buying and selling of foreign exchange vis-a-vis the rupiah. But when we did that in July of 97, after the Thai baht was heavily depreciated, it didn't work. So we knew that we should try something else. And in the end, by mid-August 97, we completely free-float the national currency, the rupiah. And since then, it was a little bit stabilizing for a while. And the epicenter of the crisis was actually even leaving Indonesia to South Korea. But unfortunately, in late January, it went back to Indonesia. So with that kind of things, we know that the problem was much, much bigger than we thought or we expected before.
Well, Indonesia was probably the worst affected country in the region. The rupiah collapsed. There was a run on the banks, which in turn led to high inflation, panic buying, riots, political turmoil, and the collapse of the Suharto government. The IMF has been blamed for prescribing wrong policies, tight monetary and fiscal policies, and imposing too many conditions. However, some analysts had attributed the crisis to more structural factors: corruption, cronyism, nepotism. In your view, which of these two factors were more critical? In retrospect, do you think things would have been different if the IMF had not pushed for the closure of the banks or insist on such tight monetary and fiscal policy?
Well, I was convinced that both the external and the domestic factors played important role in the crisis. Domestically, because many banks were undercapitalized, and externally, there were very high leverage, a lot of exposure in foreign exchange, and many of them was not even doing any hedging at all. And the trigger from the Thai baht depreciation was indeed very real. So in my opinion, both the domestic as well as the external factors were really working to our disadvantage very much. And as I mentioned, with many banks undercapitalized and carried heavy burden of foreign exposure, so most of them facing the double mismatch, and all the hell broke loose. And finally, one should not overlook the social and political dimension, the weakness of actually the social fabric because of the authoritarian government ruled by President Suharto, who ruled Indonesia for 32 years at a time. So there was increased pressure to the banking sectors and in the end to the economic management in general.
Well, despite being the worst affected, Indonesia has done relatively well since the Asian financial crisis and is now one of the more resilient emerging markets economies. It is no longer a member of the fragile five emerging markets that were badly hit during the taper tantrum of 2013. Why do you think Indonesia has done so well? What are the factors contributing to the strong performance of Indonesia? And how do you assess its resilience and prospect going forward?
Well, I could only say that Indonesian has learned very well, even though through the hard way. Both the business community, the banking sectors, as well as the financial and monetary management. The banks were becoming healthy since then. Banks were capitalized well, and they're good in taking their foreign exposure, so they no longer face this double mismatches as before. But the factors, I guess, in contributing to this strong performance recently was, part of all this hard learning by the business community in particular, and also the central bank management, as well as the coordination between the central bank and the Minister of Finance, which was very important. And during the crisis, it was sort of being left out in the dark. So the Bank Indonesia was like fighting as firefighters on its own practically at that time.
Okay, I'm going to move on to DG Liwah. The Philippines was among the least affected by the Asian financial crisis because, as former Governor Tatangko said in his oral interview, Philippines was not that highly leveraged because it was a latecomer to the Asian party. In fact, it was largely bypassed by investors and international banks until the early 1990s. And yet it was affected by the contagion, and the BSP had to let the peso go, basically let it float. It was also forced to jack up interest rates and tighten fiscal policy to defend the peso because its reserve was not sufficient. So in a sense, Philippines was like an innocent bystander who happened to be in the wrong neighborhood where bullets are flying around. So looking back, do you think the Philippines could have responded differently? Do you think that a liquidity facility like the CMIM would have made a difference in the response if it was available then?
Well, thanks, Howie. Yes, in more ways than one. The Philippines seemed to be innocent bystander during the Asian financial crisis. We were just on the 5th year of undertaking policy and structural reform process to open up the Philippine economy and make it more competitive and market-oriented. We were working hard, especially with our Congress, in correcting various institutional obstacles behind the country's macroeconomic imbalances and structural rigidities that have limited our growth potential for decades until that time. That's why I would argue instead that even if we were quite late in the party, we were doing quite well, actually. In the 6 years prior to the crisis of 1997, GDP averaged 3.5%, but we declined by 0.5% in 1998, precisely because of the Asian financial crisis. The balance of payments, for instance, even showed a good surplus of 1.4 billion due to robust exports and services. The reform strategy was beginning to work, actually. Even before the crisis, in fact, the peso was beginning to be floated within a wider band consistent with the gradual liberalization of the foreign exchange regulatory system. The financial sector was being opened up. Public finance was being strengthened by tax reforms. So it was therefore a rude awakening on our part that 5 years of undertaking policy reforms turned out inadequate. The contagion from the AFC was just too strong a wind to lean against. Loss of confidence across Asia, not just in the Philippines, was rather generalized. given the practice of foreign investors in bucketing countries by region without so much of an informed discrimination or careful assessment of various countries' basic fundamentals. Now, could we have responded differently? I don't think so. Time was of the essence. Stabilization of the economy was primordial and of the highest priority. An asset bubble was actually threatening at that time. We also needed to arrest the stabilizing capital flight. So monetary tightening was called for. We needed to discourage excessive domestic borrowing that was funding dollar purchases and bringing down the exchange value of the peso. At the time, 5 years of policy reforms did not seem to convince the market to stay. We had to draw down from our forex reserves to discourage sharp fluctuations of the peso, as we tried first to widen the FX bond. When it was too difficult to sustain managing the exchange rate without dissipating our precious foreign exchange, well, we decided to float the peso. Looking back, it was a wise decision because since then, the peso has adjusted to market developments on a daily basis without any sharp, discrete adjustment that could otherwise be destabilizing. One-way bet against the domestic currency seems to have lessened very significantly. And ironically, a floating exchange rate seems to be more stabilizing. So I don't think a concept or an institution like an Asian Monetary Fund, for example, if it was organized then as CMIM today, would have made a difference unless it offered the same magnitude of resources as the IMF, minus the harsh and innumerable conditionalities it imposed, for instance, on Korea, Indonesia, and Thailand. That is another lesson of the Asian financial crisis. Regional financial safety nets needed to be big or significant, quick disbursing, accessible, and supported by a reasonable set of conditionalities. Prior structural actions should be avoided because no country would be able to deliver on them. This would only threaten an otherwise quick adjustment process. So I think moral hazard was given an unreasonably heavy weight in considering rescue packages during the Asian financial crisis. Howie.
Yeah, so it seems that one of the key difference between Philippines and the other countries is the leverage, right? Because of that, you are able to, allow a higher interest rate without damaging the economy too much. The CMIM is supposed to be a second line of defense for member countries in case their own foreign reserve is not sufficient, right? But as pointed out by many critics, the CMIM has not been drawn upon, even though it was set up 10 years ago. For instance, in the current pandemic crisis, there were no requests by any of the members to use the facility, even though many of them have implemented very large stimulus packages to support the economies. Why do you think that is so? Is it because the members have built up strong economic fundamentals and have sufficient reserve and therefore have no need to access the CMIM? Or are there other factors?
Yeah, well, it's true, Howie, that the CMIM facilities is yet to be used by any ASEAN +3 member countries for a number of reasons. One, it was only recently that the overall amount was increased to 240 billion and the IMF, the linked portion, adjusted to 40%. Of course, the increase to 240 billion came much earlier. There was just too much political, for me, timidity and hesitancy to strengthen the mutual assistance between and among countries. Two, there remains stigma to member countries approaching the IMF, or for that matter, an Asian Monetary Fund or the CMIM itself. Some countries would indeed use their own reserves, draw on the bilateral support from the bigger economies and from commercial sources, where they can raise huge amount of money from without much fanfare from the capital markets abroad. And finally, since the AFC 25 years ago, many of the economies in the region have also addressed their respective weaknesses during the crisis through sustained policy reforms. And I think that is the last lesson to me of the Asian financial crisis. There is no substitute to policy reforms in strengthening the resiliency of economies against another crisis.
Oh, thank you, Diwa. Okay, let's move on to Kawai-san. As you know, Japan was very helpful to the region during the crisis, and Sakakibara-san, the former Vice Minister of Japan, was of the view that the crisis was caused mainly by speculative attacks rather than weak economic fundamentals. He also disagreed with the fund's tight monetary and fiscal policies and felt that the IMF programs were underfunded. Japan also helped to organize the famous Friends of Thailand meeting in Tokyo to mobilize financial support for Thailand during the crisis. As Sakakibara noted in his oral interview, Japan proposed the formation of the Asian Monetary Fund to provide liquidity support. Unfortunately, the proposal was shot down by the US Treasury and the IMF because of concerns over moral hazard. Do you think the concerns were valid? Was the IMF an idea way ahead of its time? Looking back, do you think the IMF would have made a difference in the management of the crisis? Kawai-san, please.
Thank you very much for your question. Just before answering the questions on the IMF, I just want to say, by listening to earlier speakers, I want to say that in the case of Thailand, economic fundamentals played a very important role. Economic and financial imbalances in Thailand did play a very important role in creating a crisis which was exacerbated by massive capital outflows. Whereas in other crisis-affected countries like Indonesia, Malaysia, and Korea, financial contagion played a much more important role. So for that matter, preventing contagion or addressing contagion can be quite important. At the same time, supporting a crisis country at the initial phase by providing a very large amount of international liquidity would be very, very important. So from that perspective, I strongly agree with Dr. Sakakibara's view that the IMF should have been created, and fortunately we have a combination of AMRO and CMIM today, which play a role close to the planned IMF. As Dr. Koh said, the United States and the IMF were against the idea of creating an IMF on the ground of moral hazard and business duplications with the IMF. On the business duplication side, I don't agree, because today we see the European Stability Mechanism working for Europe, cooperating with the IMF. IMF and IMF could do a similar task, but today CMIM is now trying to work with the IMF. The moral hazard issue, this is a difficult issue, but by observing Asian countries' performance after the Asian financial crisis, we do not see any kind of sign that countries may be exposed to the risk of moral hazard, namely that CMIM money may come, so the country can embark on very kind of dangerous, risky policies. We don't see that. Countries are very careful, cautious, and they don't want to go to the IMF once again. So they want to make sure that they want to strengthen their own economies. Now, if an AMF had been created, what would have happened? Well, around that time, when the idea of an AMF was proposed, the amount of money was, floating around like a $100 billion fund. So that was far bigger than the money provided to Thailand by the IMF, which was $4 billion, and much larger than the amount provided to Indonesia or Korea. So a large amount of injection of international liquidity at an early phase might have been able to prevent massive capital outflows because of confidence, and could have mitigated the economic impact of the crisis. So it's very unfortunate that there was no AMF. Well, of course, in the case of Thailand, maybe the discussion was, the AMF discussion was made in the summer of 1998 after the eruption of the Thai baht crisis. But an AMF could have played, important role in the context of Indonesia, Korea, or Malaysia if set up in an appropriate and timely manner.
Thank you, Kawai. Obviously, you believe strong supporter of the CMIM then. The IMF has been blamed for prescribing the wrong medicine and making the situation worse for the countries hit by the crisis. In retrospect, how do you see the role of the IMF? Were there anything they could have done differently?
Yes, absolutely. The role of the IMF is the role of the IMF at the time of a crisis is to provide a sufficient amount of international liquidity to prevent the initial liquidity crisis becoming a systemic crisis. And also another role is to offer policy advice so as to support economic activity and economic recovery, and to encourage the crisis country to undergo serious structural reforms, particularly in the financial and corporate sectors. Now, some of them were done by the IMF. Well, in the context of Korea, the IMF did I believe, very good job, and the Korean authorities responded positively and productively to the IMF advice. I think the Korean policymakers were committed to reforms and financial and corporate sector restructuring. And there was sufficient political will. But in the context of particularly Indonesia, there were too many conditionalities on structural issues like cloth monopoly, the rice distribution system. Many of these were totally unrelated to the eruption of a very sharp financial crisis. There were problems, there are deep structural problems, but at the time of financial crisis, when the house is burning, trying to build a strong house is very difficult. First, put out fire and then rebuild. And macroeconomic policies, other earlier speakers also talked about this. Fiscal policy tightening was a wrong medicine. Fiscal policy should have been expansionary, and very deep monetary tightening could have been avoided. So with a more appropriate set of policies, the Asian countries, particularly Indonesia and Thailand, could have avoided deep financial crisis.
Okay, thank you, Kawai-san. We are running a little bit short of time, so we have a question here. So I'm going to post that to you, all of you. Malaysia escaped from the 1997 crisis because they were very fast to close the economy from external factors. Basically, they used capital control. Why can't the others do the same? Could they have done the same thing at that time? Maybe Pak Sudrajat, you want to start? Oh, cannot hear you. Can you turn on the audio speaker?
Sorry. I guess for the case of Indonesia, it was very difficult because for years we have been liberalizing the business industry, trading, etc., such that making a break like that would be close to impossible in my opinion. So I think it was difficult for Indonesia to do just that. We sort of having a very open, very liberal, both in the domestic trading as well as internationally. Maybe we put too much things on its head that we have to suffer as the implication of that.
Thank you. Mandi, you want to take the question?
Well, I think Malaysia also looked at Thai experience, open capital account, and I think they decided to restrict, the inflows and outflows of capital to stop currency speculations. I think most countries would want to do that, but in our case, I think we were a little bit late. We also did, adopt capital controls to try to hold the momentum of speculations. But I think that this sort of thing has to be accepted as a general approach. And this is something that I have been saying that capital flows and speculation usually is a global nature, and individual policy response by countries might not be able to deal with it. So supposing Thailand put something up, or Malaysia put something up to prevent access to their local market, the capital might go and bother some other countries. So I think what we would need would be a regional approach of how to control this speculative capital, so that it provide the safety for all the countries.
Okay, we're running a bit short
May I
time.
say just a word?
Yeah, go ahead. Quick.
Yeah. Okay. Very, very quickly. I think the Malaysian experience provides a model for crisis management. Malaysia did not go to the IMF, but Malaysia closed its capital account and returned to a fixed exchange rate because capital control allowed monetary policy to be set relatively freely. So if a country under crisis is in a situation where capital controls could be imposed, then this could be a very useful model. So other emerging economies should seriously consider or at least study the Malaysian case. Thank you.
Okay, I'm going to ask you in retrospect whether the AFC is a blessing in disguise. You know, the region has done very well compared to other regions since the Asian financial crisis. It has grown faster and has become more resilient. It has become rich and has the fastest growing middle class. Some people have said that if not for the Asian financial crisis, the region would not have undertaken the structural reforms over the years to strengthen their economic fundamentals and the resilience of their economies. Given how well the region has done, was the AFC a blessing in disguise? Who wants to start? Diwa?
The sound is off.
Well, in a sense, yes. The crisis made us realize that we have not done enough, or we still have many more things to do to achieve greater traction of the economy and stronger resilience against shocks. There was also the benefit of an IMF program that was more precautionary than anything else for us in the Philippines. We worked out a program of structural adjustments in the Philippines that actually considered favorable by Congress because it was done with the fund. That's ironical, actually. Looking back, the Philippine economy, after addressing many of the macroeconomic imbalances and structural rigidities obtaining at the time in various sectors and industries of the economy, has shown significant improvements in both total factor productivity and economic efficiency. Our growth potential has expanded, leading to higher employment, higher public spending for public services, and poverty reduction. We were resilient during the global financial crisis, but I think we could have been worse off during this pandemic. Thank you, Howie.
Thank you, Diwa. Any of you want to take on that question?
I think I have the same view.
Kawai.
I have the same view. Yeah.
We don't have a lot of time, so a quick one. Yeah.
Yeah, I think the AFC was successful in prompting countries in the region, to reform, both at the country levels and also at the regional level, to create better, better environment for growth and also safety. And I think things have paid off in terms of the potential growth that the Asian region have accumulated since the Asian financial crisis. I think it's in a way, it led to successful changes in the region.
Just a somewhat, I take a somewhat different view. Ideally, this Asian financial crisis should have been avoided, but still these economies should have pursued reforms. A crisis caused tremendous economic and social tragedy for Thailand and Indonesia to catch up with the pre-crisis peak of GDP. It took 5 years for both countries. Economic suffering was huge. So I would say ideally a crisis should be avoided, but once the crisis took place, I think these economies utilize the crisis as an opportunity for reform and change.
Yeah.
Hello.
Padrajat, please.
Yes. Okay. I guess, in my opinion, yes, indeed, it is really a blessing in disguise because in the case of Indonesia, I felt that the business community, for the business community, this moral hazard was very true at that time. They were so leads it to think deeply and just trusting Bank Indonesia's management so that they think that everything will be quite all right. If they're in trouble, Bank Indonesia is there to help to bail them out. And because of that, in my opinion, moral hazard is indeed the AFC is a blessing in disguise. That without that, we will never really realize that we have to restructure the banking sector, the whole industrial sectors, and the whole economy as well as its management.
Okay, I think we come to the end of our panel discussion. I hope you enjoyed the lively and spirited discussions. And you may not agree with some or all of the views, but it goes to show how 25 years on, the AFC is still a very controversial issue. The region was obviously traumatized by the crisis and vowed never to let it happen again. The region was devastated, and the outlook was bleak at that time. A lot of economists had written off the region. They predicted that it would take at least 10 years or more for the region to recover. And yet the region bounced back very rapidly and emerged even stronger than before. Hence the title of our book, Trauma to Triumph, Rising from the Ashes of the Asian Financial Crisis. It would appear that the countries in the region did learn the lessons of the crisis. Bitter as the experience was, most of the countries swallowed the pride and resolved never to let the event happen again. They went on to reform the economies, strengthen the macroeconomic and prudential frameworks, and build up foreign reserve as buffer against capital flow volatility. As a result, they were in a much stronger position when the global financial crisis hit, and were able to weather the crisis relatively well. They also decided to set up the CMIM as a second line of defense and MRO to provide macroeconomic surveillance. So it's been 10 years since the CMIM and MRO were established, and we have just been hit by another massive shock, the COVID-19 pandemic, from which we are still in the process of recovering. It is therefore timely to look back and ask ourselves whether the facilities are still relevant and adequate, and how they need to be changed in order to meet the new challenges ahead, which is a topic for the next panel discussion. Let me close by thanking my panelists for agreeing to participate in this seminar. I think the discussion has benefited enormously from your willingness to share your experience of what happened 25 years ago, and their reflection on the causes and lessons of the crisis. Without their sharing, this seminar would not have been as interesting and insightful. Finally, let me thank all of you for participating in the seminar.